Hello everyone and welcome back to Stalking Stocks. Today's date is Monday, February 5th. Let's jump into it. Starting things off with how the markets fared after last week's week of trading. We saw both the S&P 500 and Dow Jones end up about 1.5% for the week, concluding its fourth straight week of wins. And why was this? Well, it was largely driven by some great tech earnings, basically all piggybacking off of Meta and Amazon, who absolutely blew their earnings reporting out of the water. And after those great earnings, specifically from Meta, we saw Mark Zuckerberg's fortune jump about $28 billion, putting him close to that $170 billion mark net worth, which is the richest that he has ever been in his entire life. And speaking of that, when they announced that they're going to be paying out their first dividend, the dividend for Mark Zuckerberg is going to be approximately $174 million. So quite the nice payday for the CEO and founder. Next, let's move into the job report that released on Friday for the month of January. The estimate for January was expected to be about 185,000 jobs to be added to the U.S. economy, and we saw that number absolutely smashed when we saw about 353,000 jobs added instead. So basically doubling the estimated jobs to be added. We also saw the unemployment rate hold steady at that 3.7 mark, where estimates were expected to be at 3.8%. Business services and healthcare were the two leading industries for job opportunities in January. We saw about 74,000 jobs get added in business services and about 70,000 get added in healthcare. It's a very interesting time for the labor market. I know a bunch of people currently in my sphere looking for jobs and really not finding one and applying to countless places, but it does seem there's opportunities out there, so it's just a matter of finding the right one. And if you're currently in the job market, please let me know your experiences on how it's been for the past couple months in the comments below. Next up, we have to talk about Macy's. Now, Macy's has been in a downward spiral basically for the past 8 years, but Macy's new CEO, Tony Spring, just started today and will be taking over from the previous CEO, Jeff Gennette, as he has retired. Now, Tony is coming into a very interesting and tumultuous period with Macy's, as they have seen a lot of inflation hurt their bottom line, and also a lot of people that just don't want to go to a department store to shop anymore. They'd rather do it online. So Tony's plan is to kind of really focus on creating great product offerings and new product lines that are going to attract new customers to come and shop with Macy's. He is really hoping that the products will speak for itself and win shoppers over. Now, Tony has a plethora of experience in the department store industry. He came from Bloomingdale's, which is another very large department store, but Macy's is a different beast, and he's going to have his plate full of challenges ahead of him. If you are, or maybe you were, a Macy's shopper, let me know your experience, because I really don't go to Macy's very often, but I'd love to hear some customer reactions to some possible product changes that are happening at Macy's. Now, next, we have to talk about the issues that are currently ongoing in the Red Sea. We discussed this a few weeks ago with the Houthi militant attacks against vessels traveling through the Red Sea, and we currently have a political divide between Congress and the White House in how to manage this problem. The Biden administration has sent the Navy to escort some of these commercial ships through the Red Sea and prevent any Houthi militant attacks against them. The issue that Congress has with this is that the majority of commercial ships traveling through the Red Sea are not U.S.-based ships. In fact, 97% of the ships that are traveling through the Red Sea to deliver U.S. imports are foreign-based ships. Only about 2.6% of U.S. trade is transported by U.S.-based ships. The majority of U.S. trade is done through foreign ships. So there's a great divide here on what is the right course of action. Should we be supporting some of these commercial ships that are foreign, or should we just support the U.S.-based ships? However, if we just support the U.S.-based ship, then we run the risk of about 97% of our U.S. trade being impacted by the Houthi militants targeting these foreign-based ships. Definitely a difficult decision here, and it's going to be interesting to see how it's going to play out over the next couple of weeks, because this has the opportunity to have drastic impacts on our U.S. economy. So looking forward to this week, what are the major stories that we're going to be looking at? Starting things off with earnings. It will be a pretty big week for earnings. Today, we will see McDonald's release earnings, and then on Wednesday, we are going to see Alibaba, Uber, and Walt Disney. Definitely going to be a great week for earnings, and we will cover all of that and more in Stalking Stocks every weekday at 7 a.m. See ya.